profit can be whatever you want it to be. It could be $5,000 for all I care. But the risk, your reward has to always equal your risk or higher. So let's talk about some of the advanced technical tools that you're going to use to make this 100. I'm going to make it as easy as possible for you. All right, but before we start, I want to know what kind of tools you guys use now. All right, I want to wake some of you guys up. All right, what indicators do you use most often to trade? All right, we're going to talk about all of these. All right, some people use moving averages, some people use trend lines. I see the John Carter. Those are from my people that are on TD Ameritrade. Fibonacci is kind of cool. We're going to look at our Fibonacci tool, and then we got chart patterns and just technicals. Okay, that's perfect. I see a lot of people are using moving averages. All right, so for this strategy that I'm showing you guys today is scalping. I'm not going to show you swing trading. There's other webinars I have where I teach swing trading and using the 200-day moving average. We talk about that in 3 of our webinars. We're talking about consistently making $100 a day. In order to do that, we're going to look at one chart and 2 tools. We're going to look at a 1-minute chart. We're going to use the John Carter, and we're going to use the Ichimoku. That's it. We're not going to use nothing else. We're going to keep this as simple as possible. All right. So what are these things? In my opinion, this is the easiest trading strategy on earth that I've created. The easiest trading strategy on earth, in my opinion. It's so easy to use, okay? And most people, if they're consistent doing it, it's very hard to lose using this strategy. Like, you really got to be messing things up. And I'll show you guys how you mess it up. Because you guys will go out there and mess a strategy up and then blame me. And I'm like, what chart are you using? The day chart? Didn't I just tell you to use the minute chart? Yeah, well then, you're messing up. You got to stick to the rules. It's a 1-minute chart. You're going to use the Ichimoku, and you're going to use the John Carter TTM trend. I'm going to show you guys how to put that on your chart. First of all, we want to know that the trend is your friend. We're not going to counter trend. Don't come to me with these counter trending tools trying to trade. All right, y'all know that I'm against counter trending. I go with the trend. I go with the trend of the market. If I see the ocean and the waves are going left, I'm swimming left. Most of you guys are swimming right. Y'all swear y'all stronger than the ocean. Ego. The market is up big today. What are y'all doing? Shorting. Man, the market shouldn't be up so high. I'm going to just short because it's too high. The market is selling off really hard. What are you guys doing? I'm going to go against it and go up. No, not when you're trading. When you're trading, the trend is your friend. So I'm going to teach you guys how to look for the trend using the best trending indicator that's out there. So let's talk about my method of entries. My method of entry, and I'm consistent with this. Y'all gonna see me talk about this 50 years from now. I always get in on the 3rd wave. We always miss the 1st wave. The 2nd wave is gonna come halfway, and then the 3rd wave is the biggest move. I always get in on 3rd waves. 1 wave up, down, up. If I'm shorting, it's the opposite. I want to see something drop. Then I want to see it go up a little bit, and then it start to turn over and come back down again. That 3rd wave is where I get in. Everybody knows where my stop loss is going to be. That's why I always challenge anybody to challenge my strategies. Because I'm like, yo, I got the most simplistic strategies that's going to make you money that you're ever going to come in contact with. Because I made it that way. I wanted to make sure that when I trade, it's so simple and it's so easy, a 10-year-old can trade it. Because the market either is going to go up or down. Y'all make it complex. I don't. It's literally like going to the casino and picking red or black. Your job is to make sure that you're on the right side most of the time. So for one, you got to have the best trending indicator. What indicator pretty much tells you that it's going to be bullish 75% of the time? Just using the indicator alone already put me in the winning circle. Okay? So you got to use the best trending indicators. Then you just got to manage it. 99% of my clients that come to me, where they go wrong is they don't know how to manage a trade. How much are you risking? What's your reward? I can fix all y'all problems in 5 minutes. How much are you risking? I'm not risking anything. I'm risking the whole thing. Well, then how much are you taking? 10%. All right, so let's go back and just go through what you just said. You're risking 100% of your trade, but you're gonna take 10% every single time you take profit. So that means if you take 10% 10 times in a row, and you double your account, and then the 11th time you lose, and you lose all of it, you literally won 10 out of 11 times, but you got a losing strategy. That's how 99% of y'all trade. You basically set yourselves up because, for one, y'all don't think y'all supposed to lose. That's fault number 1. You're gonna lose. You're going to lose. When you lose, how much are you going to lose? So by using my method, I automatically tell you, look, you're either going to risk $100, or on the 2nd move, you're going to put your stop right there. Look, 1 move, 2 moves, get in somewhere on the 3rd move, stops right there. The stop is in the same place every single time, same amount. I'm so consistent with it, no one can challenge me on it. Because I can look at your chart and say, all right, that's the stop. Where did you get out at? Way down here. 3 days later. 3 days later? What? You were supposed to be out. Well, you only lose when you hit the sell button, right? Nah, who's teaching you how to trade? You don't want to be wrong. You're going to be wrong. And when you're wrong, look at how much I lose. Watch this. If this goes up, down, then I get in on the 3rd move. And then it goes around and it says, oh, no, we're about to go lower. I lose this amount. Look how much I win. Win, loss. Win, loss. Y'all do the opposite. Y'all risk this much to make this much. Risk this much to make this much. You got it backwards, which is why you're having a hard time trading. Turn the tables. I want to lose a little bit, make a lot. I'm saying this a lot because I was taught that if you say things in 3s, people remember it more often. 1 move, 2 moves, 3. I want to get in on the 3rd move before I get to this highest point. So you can get in anytime here. Get in. If it turns around, get out here, or have your maximum risk, which is $50 to $100. How much do I want to make? $100 or more. Well, Joe, I'm up $300. What should I do? I don't know. Didn't you reach your target? Yeah. Weren't you trying to get $100 a day? Yeah. So then don't call me the next day and you down $300, because that's on you. I'd rather you be up 300 and then it goes back to break even than up $300 and then I'd rather you be up $300 and break even than up $300 and then down $300. I see y'all do that all day in the options market and then blame me. Joe recommended this stock. He's terrible. No, you're terrible. All right? Don't blame it on me, because it's never been about the trade. It's always been about the trader. And I always tell people that when you lose, take ownership of it. You lost, not me. I know how to trade. I'm good. All right? Learn how to do it. All right? So where's my stop? Right here. 1, 2, 3. Stop right there. If it was going down, 1, 2, 3, my stop's going to be at the top. Very important. All right, we're going to use the John Carter. The John Carter is going to give you the best trend ever in history. I don't care if you're trading, I don't care what chart you're looking at. If you're trading Forex, futures, options, stocks, crypto, it don't matter. The John Carter works on everything. I perform a magic trick every webinar. Every webinar. That's why I do a chart. So, Joe, give me a stop. I bet you I can show you where it trends. Can anybody else do it? Nope, because they don't know what trending indicators to use. They got a 5-minute chart to tell them when a 20-minute chart is going to do something. It's telling them when a day chart is going to do something. Make it simple. The market's going to go up or down. Decide. Are you going to go up or down? And if you lose, I'm going to lose a little bit to make a lot. That's what investing is all about. All right, so what is the John Carter? We're looking for 3 consecutive candles. That's it. That's the only numbers I want y'all to think about. 3 colors, 3 red or 3 green. That's how simple this is. 3 red or 3 green. Hold up, Joe. You mean to tell me I done paid $5,000 to take this other person's course, and all you got to do is pick 3 reds or 3 green? Yep. Why? Because the market goes up or down. Y'all make it complicated. All right. So 3 candles. Look at this. 1, 2, 3. That means it's probably going to go this way. Does Joel get in just because it goes down? Nope. I want to see 3 moves. 1, 2, 3. Joel gets in, stops right there. All right, that confused a lot of people because y'all not about short. All right, let's go in this direction. 1, 2, 3 green. That means I need to be going in this direction, but it's probably going to go down. And then when it starts to go back up, Joel gets in. Stop is right here. Y'all see how much I lose when I lose? It's so small. But when I win, it's big. Joel only shows profits. He don't show losses because I only lose 1 out of 5 times a week. Because the advanced traders win 65 to 75% of the time. He can't just be winning that much. Yes, I can. And I do. I'm going to show you guys today what you should have done. All right. And y'all hear the passion in my voice because I want y'all to make money because I'm so sick of y'all using all these different indicators to trade something so simple and so basic. And it's because you're complicated. You're looking at YouTubes and books and listening to this educator and that educator, and the market don't do nothing but go up or down. Manage it. Send my check in the mail. That's how you fix the problem. The problem isn't about what you pick. The problem is you. All right. So how do you make $100 a day using the Ichimoku? Very, very simple. This is the Ichimoku cloud. If you're above the cloud, you go long. That's it. That's your $50. If you're above this cloud and it's green, 1, 2, 3, you can take a shot. Just looking at this move right here. This was today. What's today? September 10th. This is today. This is today. Today. At 9:30. No, this is 8:30. Let's say you woke up at 8:30 this morning. You're going to say, I wonder if we're above the Ichimoku, this cloud, or below it. Well, we're above it. Well, then guess what direction I'm going to go? This way. Then you're going to do what a 9-year-old or 8-year-old would do and count. Can you count to 3? If you can trade this. Hold up, Joel. 1, 2, 3. I can get in. Yep. And all I have to do is go up and then down. You could have got in here. Up, down, and then got in right here at 28,000. Yep. And you mean to tell me if I had $2,200 when it went from 28,000 to 28,160, I was up $160 in 25 minutes. Yep. And it was that easy. Yep. And you do this every day. Sure do. Well, why is everybody else not doing it? I don't know. I've been teaching futures for 10 years. Okay? Because we like to make stuff complicated. And I don't. I told myself, I'm not using more than 1 or 2 indicators on my chart. I'm either going to lose, and I don't mind losing. If I lose, I lose. The market going up or down. That's it. It's going up or down. If you're below the cloud, you short. When you're above the cloud, you go long. It's literally that simple. Just learn how to get it. 1, 2, 3. This is where you guys go wrong. You see 3 candles, but y'all want to count 3 candles way up here. Well, I counted 3 candles, Joel. 1, 2, 3. So I bought here and then I lost. Your trade sucks. You should have been in way back here. Or right here. Or right here. You chose to get in on the 4th move after we got above the Ichimoku. That's on you. The market opened at 9:30. You should have been in right here. Okay? At the earliest. At the latest. All right? If you're underneath the Ichimoku, you're going to short. All right? That's how you're going to make your $100 a day. Okay? So what do you need again? We're looking at the YM. You need a 1-minute chart. You need the Ichimoku. You want to be above the Ichimoku. This is the Ichimoku cloud. It's telling you what direction to go. When you see a bullish Ichimoku cloud, you stay bullish. You have your risk to reward in place. How much is it going to cost me? $1,100. I just want to make sure I understand this, Joel. For $1,100, you telling me I can buy this back and forth, back and forth, back and forth, back and forth, 1,700 times a day. Yes, as long as your account is above 1,100. There is no maximum amount that you can't get in or out. You can day trade. You're not limited to 3. Okay? You want to use the method. You want to be above the Ichimoku cloud. If you're above the Ichimoku cloud, 1 move, 2 moves, Joel gets in, stops right here. Joel gets in, stops right here. Joel gets in, stops right here. Well, what if that's just $20? Then get out at 20. I still want to make 100. I can do this. I can lose this 5 times in a row and win 1 time and make my money. All right. You can also use the Fibonacci retracement tool. So the Fibonacci retracement tool, so for you guys that don't know, when stocks go up, they stair step going up. So when stocks stair step up, which is actually the most common pattern in the market, I know a lot of you guys trade trying to get in right here. That's not the natural flow of the market. The natural flow of the market is not sideways, like most of you guys trade. The natural move of the market is a stair stepping pattern to the upside. Well, when things stair step up, they can't go 100% or they come all the way back where they start. So you can use a Fibonacci tool to tell you when you miss a move, what is half of this move down before it starts to go back up again. Well, stocks that are stair stepping up, this move that it comes back before it goes higher is always between, not always, most of the time is between 25 and 50. Well, what if it goes to 50 and I get in and then it starts to go backwards and then I lose? What did you lose? You lost $50 or $100. If you're in this game to not lose, then you're not in this game for the right reasons because you're going to lose. You're going off of volume. You're going to lose 1 out of 4 times. And I'm being generous with that. You're probably only going to lose, I'm not generous. I'm being like very strict. You're probably only going to lose 1 out of 9 times if you do it right during the trading hours. Okay. All right. So let's go to charts. Let's look at this bad boy. So let's go to 9:30 this morning. Let's see how much money we could have made today trading the YM. Then we're going to look at the NASDAQ. Okay. So this is a stock chart. This is the Ichimoku. So at 9:30, shoot, not even at 9:30, at 7:45 this morning, you could have bought this contract. Hold on, guys. Let me let these calls out of my office. Sorry about that. Dogs don't give a dang about my webinar. All right. So what am I looking for? Now I see that the cloud is red. I don't really like going long until I see either a straight line or this being green. Even though it's above it, I still don't go long if I see this cloud angle down. So this yellow line is important. If that yellow line is angled down and I'm above it, I'm not going to go long. I'm going to wait until it flattens out. And now that it's flattened out, I have a whole bunch of green candles. 1, 2, 3. So I'm going to look for 3 moves. I'm going to look for a move up. I'm going to look for a move up and then a move down. Okay. A move up and then a move down. And it's going to come to the 23 to 50% area. When it goes up, down, Joel's going to get in somewhere in here. I'm going to get back in on the 3rd move. I'm going to get in when this trend line breaks right here. So 1 move, 2 moves. Joel is in right around 27,865. My stop is going to be right there at 27,847. Now see that? 847. Now it looks like it went up and then it came back. So I would have been out of this trade at break even, right? So we're going to look at the next move. You might have to keep doing this over and over again. We go down. We start to go up. 1, 2, 3. Here's a move. 1, 2. It starts to go up in value again. Joel gets in. Let's just say 27,900 because we want to make sure that we understand the numbers, the whole numbers. Let's say I bought this with $2,200 and I had 2 contracts because we want to make sure that we know how to calculate it correctly. So I'm going to get in long at 27,900. My stop is going to be down here. So my stop is only $70 away. I'm going to get in here. I'm only going to lose $70. Now, how much money am I willing to make? $100 to $200. So if I get in at 27,900, let's see how high this bad boy went. This was at 830. It kept going up higher and higher and higher and higher before it started to go underneath the Ichimoku. So we got all the way up to 28,160. So we're going to subtract that 28,160. So 28,160. So I was up $260 by 9:45. Let's say you got in at 9:30. Let's say the 9:30 candle happened and you saw it go up. You see all this green. It went down and then you got in right around here at 28. Let's just say 50 just to keep it easy. Well, it still rose from 28.50 guys to 28.150. It jumped from 28.50 at 9:30 to 28.150. What's 28.50 minus 28.150? $100. How fast did I make that money? 9:30. 1. I had made my $100 by 9:47. 9:32 to 9:47. I had made my $100. How many of you guys have made $100 in 15 minutes? Then it started to go red. Well, Joe, how do I know when to get out? You get out when you reach your target or higher. There's 75,000 different ways you could have got out. Just don't lose no money. If I started here and I was up 100, I should have broke even right there. All right, you could keep doing that. That was from 9:30 to 9:45 or 9:50. Watch this. You could have kept doing this all day long, but watch this. We broke underneath the Ichimoku. What does that mean? That means we can't go long anymore. We then saw it go underneath the Ichimoku. Do I go short here? No. But watch what happens. As soon as it starts to go red, that's my trigger. 1, 2, 3. That's move number 1. I'm going to show you guys how to short now. Y'all just made $100 or $260 that way if you got up at 8:30. So you already got $200 in the bag using $2,200 bucks. Now, watch this. You see it go 1, 2, 3 red. That's the first move. This is the second move. All I care about is the red and that I'm underneath the Ichimoku and that line is flat. So once it started to break down here, I would have started shorting it right around the 28. We're just going to say 28.80 to keep the number simple. And it dropped from 28.80. So let's go ahead and write that. Let's say you already made $260. Then you decided to short, which is betting on it going down in value. Now look, you were long early this morning. Then you switched to a bear. So you got in short right around 28.80. Then when you decided to short, because this is one move, this is move number 1, move number 2, move number 3. My stop is going to be above here. So on the move going down, my stop is going to be up here. Never really popped that. So you start shorting at 28,080. The YM then drops, and then it drops. Let's just look at this drop. How fast was this drop and how much money did you make? Well, it dropped from 28,080 to 27,800. All right, it dropped lower than that, but we're just going to say 27,800. So it did that drop from 10:44, guys, to 11 o'clock. This is 15 minutes. 15-minute trade. It dropped from 20,880 to 27,800. How much money would we be up? Well, 28,080 minus 27,800 is another $280. So you mean to tell me, Joel, this morning I could have made 240, then went short and made another 280? Yeah, but I ain't even finished yet. That's 700. That's what, 240 plus 280. That's $520. That's most of you guys' car payments. It's only 11 o'clock. Now, Joel personally is going to stop after that. You guys could have kept going. Okay? This is still red. Now, some of you guys could have taken a long here if you wanted to. But as you can see, this is still angled down. So you could have taken more shorts if you wanted to. You could have taken a short right here. Look, 1 move, 2 move, 3. As long as you're underneath the Ichimoku, you go this way. If you're above it, you go up. 1 move, 2 move. Remember, it's going to stair step going up and down. As it's stair stepping down, you get in on the third move. You could have shorted this again at 27,880 at 12 o'clock. It went from 880 to 720. That's another $160 if you wanted to. Okay. Let's say you waited to the end of the day. It's 2 o'clock. We underneath the Ichimoku. You see it go red. 1, 2, 3. Let's say you got in late on that move. Here. And then it started to go down. And you started to short it at 27,700. It went from 27,700 to, okay, it finally got down to 27,440. What's 27,700? What's 27? Oh, my fault. I think that was, what was it? 27,700. What's 27,700 minus 27,440? 27,700. 27,700 minus 27,440. Another $260. Okay, let's say you didn't have the $2,200. You only had $1,100. Well, you would have made $130. So that 240 earlier, then another $200. So the $700 that this person made, you would have made half of that $350. You only was using, what, $1,100. You made a 25% return consistently, and you took 3 trades. And guess what, guys? You can keep trading all day long. Look at this, still going down. And now we just finally started to go up, and the Ichimoku started to go up. All right, you can trade this over and over and over and over and over again, and it doesn't matter. All right, so let's do it differently. Let's trade the NASDAQ, MNQ. Let's figure out how much it's going to cost us and how much money we can make. So first things first, what do? You type in the MNQ. I also want to see how much the MNQ moves a day. It moves on average $300 a day. Word, 300. How much do I need for one contract? Let's say you didn't want to use 2,200. You only wanted to use 1,760. Well, using the margin, these numbers, so 199 to 11,200, which is 1 point. If this moves $1, I'm going to make $2. Well, how did you get that from this, Joe? This says 25 cents and 50 cents. Well, this is basically saying for every quarter move, I'm going to make 50 cents. Because there's 4 quarters in $1, I'm going to make 4 times 50 cents. So when this moves $1, which is 4 times, this is going to move 4 times. That means from 11,198 to 11,199, like it just did, I'm going to make $2 or lose $2. That means if it goes down 50 points, I lose my $100. If it goes up 50 points, I make $100. Great. Well, let's do the same thing. How much money could you have made at 9:30 this morning? Well, first off, how much money did I need to trade an NQs? I needed $1,760. How much money had to be in my account? $1,760. Is that the same on all platforms? No, this is TD Ameritrade. It might cost you $500 on another platform. It might cost you $50 on another platform, which is the truth. I think on NinjaTrader, they're $50 contracts. I'm not encouraging you guys to go there because if you have the capital, I'd rather you stay on TD Ameritrade because you can blow up that account in one day. So there are brokerages where instead of $17.60, you can use $50. And the same $500 I just showed y'all we made, you could have used $50 to make all of that. But we're going to talk about TD Ameritrade today. You need $1,760. Every dollar move, I'm going to make $2. Great. So let's go to 930. Let's look for the setup. The setup is, are we above the Ichimoku or below it? Well, at 930. At 930, shoot, early this morning you should have been trading it, but at 930. This is 930 right here. Let's say you saw all of this green, 1, 2, 3, you saw this go down, and then you decided to get in right here. Okay. So you saw it go down, and you saw it go up. All right. So you would have got in around 11,510. It rose from 11,510. It rose all the way up to 11,545. So that's 35 points. That means you were up $70. So I'm just going to tell you straight up, if you are risking, if you're risking $100 to make $100 and it goes half your distance, like let's say your reward is $100 and your risk is $100 and it goes 50, you need to bring your stop to break even. So you were up $70. It didn't quite get to that 100. And then on this move right here, on this move back down, you would have broke even on that particular trade. But let's say you tried it again. All right. You tried it again. It gets above the Ichimoku. You see green candles. All right. So you broke even on this trade. And then it goes 1, 2, 3. 1, 2, 3. As it goes up, you want this is the first move. The first move is up. The second move is down. The third move is I want to get in here before here, but my stop is going to be right there. Again, how much money did I need? I needed $1,760 per contract. How much am I making? Every quarter move, I'm going to make 50 cents. That means every dollar move, I'm going to make $2. So if we get in at 11,510, so we tried it again. I think it was 11,510 right here too. We get in this time. It goes from 11,510 all the way up to the highest point was this point, which was 11,567. We're just going to say it went to 11,570. So 11,570. 11,570 minus 11,510 is going to be 60 points. Remember, I make $2 a point. If it moves $60 and I make $2 a point, that means I was up $120. So you just made your $120 right there for the day. How fast did it take for me to make that money? From 10 o'clock to 10:20. That's it. And remember, that was this move. So a lot of you guys are going to go short because you see this. This is where the mistakes happen. When you try to short it and you're not underneath the 200-day or see it angle down. A lot of you guys won't go long either because you see that this is red. As long as you're above the Ichimoku and you see that the Ichimoku is flat, the yellow line is flat to angled up, you can continue going long, but you got to make sure that you put your stop at break even. Because even if you got in here and lost, I don't know, $20 or $30, watch this move right here that you missed out because you tried to hold on to it. When it went below the Ichimoku and this line was flat, look at this. You got 3 red candles, 1, 2, 3, and a bunch of red. It dropped, then it went up, then it dropped. Here's your entry, right around 11, between 11,480 and 11,460. It dropped from 11,460 all the way down to 11,360. That was 11,480. I'm sorry, 11,460 to 11,360 is 100 points. I make $2 a point. I just made $200 in 10:54 to 11 o'clock in 6 minutes. $200. You done for the day by 11 o'clock. You could have made $200 here. You could have made $100 here. $100, $200. You're up $300. You broke even on your first trade, so you broke even here. You made $100 and $200. That's $300 you made. Let's just say you lost $50 on another trade. You up $200 for the day, and you took 4 or 5 trades, and you can do this over and over and over and over again all day long if you want to. See, there's another setup, another $100 you could have made. All right, when the market is volatile, look at this. Look at all this money you could have made. This dropped from 11,340 to 11,140. That was a $400 move from 2 o'clock to 2:30. That was $400 using $1,760. All you're doing is waiting to be underneath the Ichimoku red. Y'all see this? 1, 2, 3. So what do you need? You gotta have the John Carter TTM trend. When you pull up the TTM trend, you open it up, you go to plots, you go to globals, you add the red and the green. It's under the plots and the globals. You're not going to find it. When you go to the Ichimoku, what do you need? When you pull up the Ichimoku, when you get to it through studies, you go to studies. I'm going to show you guys again slowly. You go to studies, add a study. You go to upper studies. You go to EI, go to Ichimoku. When you go into the Ichimoku, when you go to the John Carter, you go to studies, add a study, John Carter, TTM trend. When you go into the studies and you manipulate the chart, you got to go into the Ichimoku. You got to go to 10 can. You got to uncheck this box. You got to uncheck that box. You got to uncheck that box. And then you got to uncheck that box. You leave this box in because that's the yellow line that you see. I'm the only one that uses this for the Ichimoku. I don't know anybody else on earth that does this. All right. That's your setup. That's all you need. You don't need 27,000 charts. 1, 2. That's the only thing I need. Something that's trending and then telling me if it's bullish or bearish. That's it. Everything else is managing the trade. You guys can go back. Look, I can scroll this back. Watch this. I don't even know what date it goes to. But watch this. Above the Ichimoku, here. Look at the money that you made. You see that? It don't matter. Y'all see that? I just scrolled the chart back. I didn't know what date it was going to. You get underneath the Ichimoku. What happens? Guess what, guys? It goes down. Look, I'm going to scroll again. I don't know where this is going to stop. Wherever it stops, we're going to look at it. Bam. All right. You get underneath the Ichimoku. You go short. This line is if you're above the Ichimoku, you go up. All right. You can continue to stay up. If you get in on that third move, your stop should be there. So even if you lose, okay, even if you lose, you get above the Ichimoku, line is flat. You go long. Okay. It gets below the Ichimoku, you go short. Don't be in a long trade all the way underneath the Ichimoku unless your risk to reward is $50 or $100. All right. So that's the NASDAQ. You guys can also trade gold. I'm going to show you gold really quickly because we're running low on time. E-mini gold. How much is gold going to cost me? All right, I didn't even look at gold today, so I don't even know what it's going to do. Like, honest to God, truth, I don't know what gold did today. But how much is gold? Gold is going to cost you $1,023. There's your $1,000 I told you you needed. Every tick is going to be 0.1. That means for every dollar move, I'm going to make $10. Because for every dime, I'm going to make $1. So every 20-cent move, I'm going to make $2. That means for every dollar move, I'm going to make $10. Great. So if it goes from 54 to 53, I'm going to be up $10. I think that's right. Yeah, that's right. So how much money do I need? 1,000. Every dollar move, I'm going to make $10. So I needed to go $10 in order for me to make my $100 for the day. You can buy as many contracts as you want. I can buy 10 contracts. Well, it's going to cost me $10,000. But I'm going to just stick to one just to see how much money I could have made. I'm going to just quickly go and see if I see a setup. Let's go to 9:30 early this morning or 8:30 early this morning and see what we have here. Very first time we crossed the Ichimoku, we got green. We got a move up, a move down, and then a move up. So we could have got in right around 1959. It went from 1959 to 1967. Now I make $10 a move. So 59 minus 67 is 8. 8 times 10 is 80. I could have made $80 this morning trading gold using $1,000. How fast did it take for me to make that money from 820 to 840? Okay. Get out maybe when this trend breaks. Green above the Ichimoku is up. Below the Ichimoku, and look, I could have made even more money if I kept holding it. But look at what happens when it dropped below the Ichimoku, people. Down, up, down. Joel starts to short at 1970. It drops all the way down to 1962. That's an $80 move. $80 that could have been made on gold using $1,000. I'm in and out. My expiration date's not even until December 2020. Don't get caught up in gold and then now you got to buy, 100, bars of gold. All right. All right. So let's wrap all this up because I told you guys this was going to be 2 hours. I know it was easy. I know you're like, Joel, it can't really be that easy. It is. It's what I do every morning, every single morning. All right. This is how I make my consistent $100 a day. And it's not in options, which I also trade options. It's not in stock. Even though I can trade the options, I got enough. I have enough money in my account to day trade stock. But you have all of these weapons at your disposal. You can now trade futures. You can now trade options. You can now trade stock. Use all three. And especially if you have a $30,000 account, you have all of these different tools that you can use to make money. Just make sure that when you guys are looking at for your risk or reward, your reward should always be greater than or equal to your risk. There is no set risk or reward for your stock or your futures. I risk $50 to $100 per contract. For the minis, if I trade the bigger ones, it's $1,000. I'm an advanced trader and I don't even trade the big ones. You can trade 5 contracts of the little ones and still get half the move the big ones make. Okay? But the risk or reward is how much money are you risking versus how much money you can make. Where you guys go wrong is your risk or reward is not in place. Elite traders win 65 to 75% of the time. That's a real number. Your risk to reward should be 1-to-1 or better. That means I gotta be risking $100 to make $100. That means if I win 51% of the time, I'll be okay. How many trades did y'all see work out today? We took 4 trades, 1 trade loss. I told you guys you're gonna lose 1 out of 4 times. When you lose though, it can't be more than $100. If you call me up and tell me you lost $300 on a futures trade, you're setting yourself up $100 or less. Okay. All right. You elite traders have a 1-to-5 ratio or a 1-to-2 ratio. All right. They're risking $100 to make $200, $100 to make $500. Okay. If you're trading the E-minis, the risk isn't how much the contract is. Out of that $1,200, how much are you risking? Maybe it's $100 out of that $1,200. If it drops $100, guys, you got to get out. You got to. So what are your exits? When you reach your target or higher. I'm not going to tell you when you're supposed to get out because that's not how traders trade. Traders manage trades. Elite traders manage trades. Once it reaches my target, then you can say, all right, I'm good now. At least I'm not losing money today because the strategy I have is already 65 to 75% of the time. So I can gamble when I'm profiting. Don't gamble when you're losing. Gamble when you're profiting. Don't gamble when you lose. You got to have hard stops. $50 or $100 per contract for the minis. All right, but there are times that you might want to get out. Maybe a trend line breaks. You don't know what a trend line is. You guys got to take my first video for stock market, stock party, okay? Or even the options party. We talk about trend lines and just about everything, okay? Or maybe when the John Carter goes 3 ways, or when you hit your maximum loss. All right, when you're shorting it, it's the opposite. So let's do a review. What do you need? A 1-minute chart. Now you can use a 5-minute chart if it's after hours, okay? I won't bite your head off if you're using a 5-minute chart. It shouldn't be higher than 1 or 5 if you're scalping the way that I'm scalping. Remember, I'm teaching you guys how to make $100 a day. I'm not teaching you how to make $10,000 on 1 contract on a 6-month hold. That's not what we're learning today. You can do that on your own. I'm teaching you how to consistently make money each day, $100 a day. Your risk to reward, the minimum has to be 1-to-1. I got to risk $100 to make $100. I want you to find your stock setups through the John Carter, the Fibonacci, or the Ichimoku cloud. And I want you to close your position if you're in a commodities trade or an index before the expiration date. You got to do that. Don't get yourselves in trouble. All right, so let's answer a couple of questions before we get on out of here. This is a pop quiz. What chart do you use for scalping to make $100 a day using the What Would Joe Do method? All right, let's see who's still here. Uh-oh, why aren't the answers popping up? All right, maybe this one's not working. Looks like, well, the answer is 1 minute. All right, the answer is 1 minute. When you're trading like Joel, you're using a 1-minute chart. Now, a couple of you guys gotta pick the 5-minute, okay? But it's the 1-minute chart or the 5-minute chart, okay? 1-minute chart or the 5-minute chart. All right, hold up. Oh, here's the answers. See, my tech people just came and told me how to fix this. All right, so everybody got that right. What chart do you use? A 1-minute chart. Okay. All right. When using the John Carter TTM trend, how many consecutive candles do you need to identify a possible trend? Yes, the answer is 3. I don't care what chart you're looking at. You could be looking at a 1-minute. Well, today we're looking at a 1-minute chart, but for those that are using the John Carter TTM trend for stock, for longer dated stock, for day charts, month charts, week charts, never changes. 3 candles. You're going to see me talk about 3 candles for the rest of my life. All right. Last question. When using a 2-to-1 risk to reward ratio, you will risk $100 to make how much? 2-to-1 ratio, guys, not 1-to-1. 2-to-1. That was the trick question. 2-to-1. When using a 2-to-1 risk to reward ratio, you will risk $100 to make how much? The answer is $200. All right. I want you guys to, if you're really, really good at trading, I want you guys to get to that 1 to 2. That's where the experts are. They're going to risk $100 to make $200, or $100 to make $500. And just because your risk is $100, people, don't mean that that's the amount of money that I'd rather you risk $50 or $40. You remember where I put my stop? Sometimes my stop is $30, and then I might lose, and then the very next trade I win 100. Now I won 1 out of 2 times, but I'm up $70. That's how elite traders continue to make money. Okay. So after this session, you guys can be honest. I'm going to clear your responses. How comfortable are you? Not trading futures, but understanding futures. All right. Be honest. Be honest. Still so. Got to go out there and do it on your own. You guys can pick red. I won't feel bad. I'm always about making my webinars a lot better. But you guys should feel wonderful about futures. I love them. Stick to the indexes. I don't want to hear horror stories about oil being delivered to any of you guys' houses. All right. But I want you guys to practice on your virtual accounts. Go to your virtual accounts. Practice your futures. Practice to see how much they cost. People, practice with the amount of money that you're going to trade. I see this all the time. You want to trade the big ES because it's $13,000 and the moves are bigger, right? And then when it's time to trade, you only have $1,300 and you're trying to make $1,000 a day. So you'll be up $300 or $400, but won't take it because you want to make $1,000, and you're wondering why your trading strategy isn't working. I want you to practice with the amount of capital that you're going to actually use. All right. So again, I have some questions here that I'm going to answer for you guys. If you don't know about it, I do webinars every Thursday. All right. Now the futures party, we just added it. So we're here today. So next week, I want you guys to take the options party. If you don't know anything about options, it's the ultimate trading tool. Now I know I tell you guys that futures is the most consistent way to make money, but options are the ultimate trading tool. You're talking about making riches in a short amount of time or a longer time period. Options is the thing. It's the ultimate trading tool. I'm going to be teaching that next week. It's my flagship product. And then at the end of the month, I'm going to bring it all together. And we're going to, for all the people that took the futures, the stocks, and the options, we're going to talk about strategy for everything. All right. I'm also going to create a new strategy book. I realize that the option strategy book, doesn't encompass everything that you need. So I am working on it. I'm going to create a strategy workbook that has future stocks and options in it that you guys can have access to. But if you're on Facebook, you want to reach me, you can go to What Would Joel Do? All right. And you can schedule a one-on-one consultation with me, or you can continue doing the webinars. You can also go to whatwouldjoeldo.com. All right. If you go to whatwouldjoeldo.com, you'll see webinars, past webinars that I have available for you. So if you missed the stock party this week, you can go in and buy the stock party live video from last week. All right. Or the options party from 2 weeks ago. And you don't even have to wait until next week. Now I am on Monday going to take that one down. All right, but it's still available to you at my pay hip. All right, and all of my webinars start at 6 o'clock. This one is not a 3-hour session. I'm going to get out of here in about the next 5 to 10 minutes. But before that, I'm going to answer a lot of you guys' questions. So again, the next party is the options party. I want to see all of you guys there. Let me get to some of you guys' questions. So I have a question here. Do you have to pay a $4.50 or so commission cost every time you change the order? No. If you change the order, it's free. The only time you pay a commission is when you either buy that futures contract or sell that futures contract. Other question is, I thought the third wave only works with the market open. If the futures market is open 23 hours a day, how do we use the third move? You still use the third move. All right. You might want to bring your risk down a little bit though. So in after hours, I won't risk $100 per contract. I'll risk $50 a contract in after hours. But I'm still using the third move. As you guys saw this morning at 8:30, the market was still moving at 8:30, and that was before the market opened at 9:30. So that's a pretty good question. All right. Next question is, when I put MYM in my Thinkorswim, it gives me choices other than MYM. What am I doing wrong? I have no idea. The minute that you put the backslash and the MYM, you might have seen different dates. So you just want to make sure that you pick the one that's at the top. Usually, if you just click MYM, that'll be the one that you take. Because there's expirations that expire. Let's say that there's a MYM expiration that's in December. Well, then naturally there's going to be a newer one that starts, in December, probably January. So every now and then, if you're still in that one for the next 3 months, you'll see the January YM. So that's probably the choices it's giving you, the one that you have now versus the newer expiration for that YM. But if you're day trading, that's not something you have to worry about. If you're long-term trading, please be an advanced trader if you're holding these futures contracts more than 30 days. All right. All right. Does it suffer from decay? No, it does not. All right. Your margin only goes up or down depending on how volatile the market is. The moves that we see are the same moves. You can go back 3 years, and if you see that the YM moved up 100 points that day, you would have made $50. Now, I don't know how much the margin was that day, but the moves are going to be the same, but you don't have decay like you would with options. And who named this cloud? I think it was Mr. Ichimoku. You got to go look. It sounds like an Asian name, so I might be being racist right now, but it does sound Asian. But check it out. Whatever you find out about Mr. or Mrs. Ichimoku, let me know as well. If we are below the Ichimoku, we are looking to short. Yes, you are. Remember, if you're underneath the cloud, especially if it's red, I want to short. That yellow line is also important. If that yellow line is angled up and you're below it, I'm not going to short. I want that yellow line to be flat or lower in order for me to short. And I'm going to short on that third wave. Do you trade futures based off the strategy you taught in the strategy party? I sure do. Third wave moves. All right. 3 green candles. It goes up, it goes down. I get in on the third wave. Good job. How can you lose money ever with the OCO bracket if you can place a stop loss and a limit order at the same time? Well, if you get in, you can still, let's say you get in right now and you're willing to risk $50. It still can drop lower than the price that you got in. Now, if it's up in value, if you're up $50 and then you place an OCO order, you're right. You can't, I'm not going to say you can't lose, but if you do an OCO bracket after you profit, there's no reason for you to lose money, but believe me, you guys find a way to do it. All right. Great questions. On the other charts, you had a 15-day, 1-minute chart. All right. So on the Thinkorswim platform, you can look at as many days as you want to. The last number tells you how, what those candles represent. So I can look at a 1 day, 1-minute chart. That means every candle is still going to be 1 minute in value. Every candle I see, 10 o'clock, 10:01, 10:02. But I can look at 20 days worth of information. I can go back 20 days, but every candle is still 1 minute. So that second number always tells you what type of chart you're looking at. Okay. Doesn't matter if it's a 30-day or 15-day, 1 minute. The 1 minute part is the most important part. Where do I find the Ichimoku? I showed you guys earlier. You go to studies, go to edit studies. That's where you're going to find the Ichimoku. Just look back at the video. Now, remember, guys, this video is going to be available tomorrow. All right. You guys are going to get this video tomorrow around 6 or 7 o'clock in the evening. I apologize. That's just how Zoom put the stuff together. All right. You guys will get the video. You will have access to that video by Monday. Don't wake up on Monday and say, Joel, how come I couldn't download? You can't download the video. All right. All right, so you can't download it, but you can watch it a million times if you want to up until Monday after 7 o'clock tomorrow. All right, you're going to get an email with the video. All right. Cool. And then on Monday, for people that didn't watch the video, they're going to be able to purchase it. So don't be mad that somebody else is going to be able to purchase it. They didn't have access to the live video, the live session, interacting with us live. Okay. But the video is going to be available even for you. If you want the video forever, you find it helpful and you want to keep it forever, by all means, look at how much I charge for it. I know people charging $1,000 for the video that you guys are getting for $30. All right. The reason why I placed it at that price is because I believe everybody should have it. All right. The futures is open for 23 hours a day. What time is it open? Well, it closes around, I think it closes at 4, no, it closes at 5 o'clock every day, and then it reopens at 6 o'clock. If I'm wrong about that, I apologize, but it does close for 1 hour a day. All right, and then it's closed on Saturdays. It reopens on Sunday evening, Eastern Standard Time. All right. I walked through the John Carter and the Ichimoku earlier on the Thinkorswim. How do you make the cloud green? You got to go through the studies to be able to figure that out. I also do a chart setup. So a lot of people after they do my sessions, they go to What Would Joe Do? They book a session. I am booked 3 weeks, so you might not be able to see me face to face for another 2 to 3 weeks. I apologize for that. Every now and then people do cancel. Just check every day to see if there's an hour available. But I do go in there and you pull up your charts. I put everything you guys see on my platform on your platform. All right, $65 for 1 hour. But I will set up your charts. But I went through everything during this video, so when you rewatch this video, you're going to be able to set it up on your own. I made sure of that. All right. Are you setting up your profit point so you can get out fast to a swing trader like me? I mean, it's up to you. Remember, once you reach your target, it's up to you on when you want to get in or out. I know some people will set their target or their losses, and then they got things they got to go do. So yeah, make sure you set up your OCO order. If $100 is what you're willing to make a day, great. Set your target at 100 and then be out. I know my wife does it all the time. She gets in a trade, she sets her target up, she go to meetings for 3 or 4 hours. She check at the end of the day to see if she lost or if she won. All right. For you guys that work 9 to 5. All right, we didn't look at the ES today, and I apologize for that, even though it's the most common one. The reason why I didn't show it is because the calculations are difficult. It's not difficult. It's just like every tick is like $12.50, right? So every dollar move is $50. So it's just harder to calculate the amount of money that you can make. But you guys can do it on your own now. All right, and then the last question, can you also show how to buy these contracts with the expiration date? So I did pull it up. The expiration date is going to be next to the actual. So when you pull up your chart, you're going to see the expiration date right here. So if I pulled up the ES, same thing. When you pull up the ES, December expiration. If I pulled up oil and I put in CL, and I look up light crude oil, my expiration is October. So I want to be careful. All right. Or oil will be delivered to me in 30 days. If you want to see how much it's going to cost to trade that oil, it's going to cost you $6,800. Every 1 cent move, you're going to make $10. That means for every dollar move, I'm going to make what? $100. No, every 10 cent move, I'm going to make 100. Every dollar move, I'm going to make 1,000. So if it goes from 37 to 38, that's $1,000 move. Now you guys know how to figure out what the margin is and how much this bad boy can move. Can the margin change? Yes. If volatility goes up, you're going to see margin go up. Does it go up on every platform? No. All right. Margin is broker specific, but the movements of the actual futures contracts are going to be the same. So I believe that's all the questions. I appreciate you guys coming out tonight. We're only 19 minutes over this time. I'm coming to you guys from Decatur, where it's greater, and I am out of here. If you have any questions, please feel free to send questions to me. Just give me 24 hours to answer, and I will see everybody at the options party next week. Good luck, and I'm out. Peace.